Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the sideways action on the charts and, of course, the pump in the stock market. So, Bitcoin's not really participating in the pumpiness that we are seeing in the stock market. It is just kind of going sideways, and you can see a lot of these altcoins are just taking their profits from the nice pump yesterday, which, if you did get in with us here at Alpha Fam, congratulations because our projection did work up. We can go over that in the transparency section. But for now, let's just take a look at the stock market. You can see that it's quite green. So it was just another lovely day for stocks. And it does look like the stock market is considering to be a little bit more bullish than, the majority of crypto. That may have to do with the risk relationships, right? Crypto is obviously a riskier sector overall compared to pretty much any other sector in the markets. If we do go over and look at the market calendar, you can see we didn't really get an update for the PMI, the manufacturing PMI over here on the Market Watch. I don't know why I did refresh, but it's just not appearing. But I do know the numbers. They're somewhere around 47 to 49. Of course, the expected forecast was like a 51 to 50. And so basically, manufacturing came in cooler than expected, which does mean that the economy is cooling down, which could indicate that inflation is being fought, right? So that does lean in favor of the markets, even though it's against the economy. It's in favor of the stock and trading markets, right? Because the Fed doesn't have to raise rates as much as it might have needed to had this number come in hot, right? And since it did come in cool under the forecast, then of course Jerome Powell and the cabal of mini dictators over at the Federal Reserve, can just think about that at least in terms of how harsh they're going to be on us. Guys, if we do just go over to the charts, so we can see, of course, that we do have this modified downtrend that I have been pointing out in the last episode, where we just kind of ignore the wicks off the top of this downtrend, just kind of consider those to be a bit of exuberance. Of course, this is just a modification of the, of that. Second boss that I did have on the charts for months now, which was basically this guy right here. Yep, there we go. And so, it's just a slight difference. And basically, you can just see the gap right here, right? It's just, are we underneath it or are we above it? Well, if we take into account the tops of these wicks, then, we did have a nice contact point here. The majority of the wick up here was in there. These wicks were in here. And we would say that we had a nice breakout. And then if you look, right, if you look at just this blue area, you can see we broke above it and we retagged it perfectly. And so that was a nice retest. However, because we are broken out of this blue line, just for extra conservatism, right? Like just to be extra conservative, I do want to just consider this shorter downtrend that just takes into account the breakdown wick, not this kind of exuberant wick, and does tag this wick perfectly, and then we did have kind of a fake out breakout, and we are hugging the underside of it perfectly. You see all these little wicks right here, right? All these little 4-hour wicks, and so I do consider this a valid line. And I don't think that we should consider ourselves to really have broken out yet unless we get above that line. It's just another kind of supply line pressure, right, that we have underneath us. So just consider that. One thing that we can take a look at is just this the macro downtrend that we had originally, right? So this just from the very top for the past year. And, we did actually break out of that downtrend, just kind of retested it very bearishly. We didn't get any type of, signs of strength off of that. We just got a very weak reaction, and people freaked out when we broke down. But look where we bounced off of, that kind of median radial that I have here. And that median radial, I did point out that this dashed line here, not this one down here, but this dashed line is very important because it does represent kind of the top of our market, right? And anytime we've been under that, we've been fairly bearish, right? But anytime that we've been above it, we've been fairly bullish. And so the fact that we flipped above it does suggest that we could have some bullishness. I mean, either sideways or bullish, okay? It just suggests that that's possible. And of course, we have other radials like this one right here. We have some type of a radial that goes through here. But for the purposes of the area that we're in, this median radial has been probably the most important one in terms of holding up our support structure during this downtrend. And if you don't understand what I mean, then just consider how we've snaked around it, okay, that particular radial. And we're doing it again, and we're popping above it again. Now, that doesn't mean that we can't just break down. Like, we're kind of like getting into these smaller and smaller waves on it. But that smaller and smaller wavesness is itself a falling wedge. You see what I'm getting at here? It's a falling wedge, guys. And so at some point, I mean, that's not drawn very pretty. But at some point, let's see, do I have a little triangle thing here? We're going to reach the end of that falling wedge. And what do falling wedges tend to do? I mean, they tend to break to the upside, okay? And what would be a measured move on that, right? I mean, oops, that's a drawing tool. The measured move, I mean, could be something like this, all the way up to 50K. I mean, that's possible. I'm not saying that's what's going to happen. I mean, this could be a more slender, falling wedge thing here, right? I mean, I don't even know how I would draw this exactly. This could be a fake out to the bottom side. This could even be a fake out to the upside. But it does look pretty interesting, doesn't it? I mean, it looks pretty interesting. That's all I wanted to say, And let's just say that like let's just say that that's the triangle. Then, let's just say that we break out, we kind of capitulate down to 14K, down to 12K, like 14 to 12K, right? Somewhere around that radial. And then the measured move could be to like 40K, right? 45K. I mean, yeah, like 42, something like this. I mean, I don't know. Like, that's just something to think about. I'm just trying to think out of the box. I'm trying to think a little bit of a macro for you guys, right? And so, if we do have a final capitulation, and I do think it would probably be our final capitulation, I would consider to buy. I would consider to buy if we had a heavy breakdown. And it's just interesting, if let's say the stock market is pumping, right, for the next month or so, and just say Bitcoin's going sideways, okay? We also have this kind of head and shoulders formation over here, right? You can see this. There's like a shoulder, a head, a shoulder, or you can just consider it a rectangle. We have some type of rectangular breakdown. And let's just say that in December, right, end of November, December, like we just capitulate again, right? And that could bring us into that $14,000 to $12,000 area, and right on top of this median radial that's just been so important, right? So I would just consider this stuff for macro, guys. And then let's go ahead and put on the good old alpha origin channels, turn on our log chart. And what would something like that look like? I mean, that would be fairly deep into my touching the grass area, right? This kind of reset for the chart. Where if we consider that we're having like a commodities and stocks super cycle, and the Bitcoin is on kind of one of those cycles where it was just too bullish to get the full retracement, and it was just too, let's say, populated by institutions to get the full like blow off top, right? then, I mean, eventually we might actually get into those areas. And could we front run it? Yeah, I mean, we front run it here. Like we only got halfway down the green area, and we front ran the top over here. We only got halfway up the red area, right? And so if we drop down to like 12 to 14,000, that would be fairly consistent with our kind of diminishing waves behavior, right? As this thing kind of modulates. And what could we end up seeing in the next cycle top, if we're modulating our wave, right? So maybe this wave is just getting less shallow, I mean, less deep and more like a shallow or whatever you want to call it. And I mean, we could touch these areas, right? Let's just kind of draw this out, like the depth of it, just something like this. And then maybe we don't get, too much above our, our 70K high. Maybe we just get to like 90K, right? 90K, maybe that 100K people were looking for. Or maybe we just triple top at 70K, okay? Like somewhere around my white line to yellow line. And I don't know exactly how long it could take. 2024, 2025, it's going to it's this is going upwards, right? Price goes up over time. And so it could be anywhere between that 70 to like 100K area. And then we get a nice little triple top there. Right? Get a nice little triple top. Pull back maybe to my bloodline again. We don't break under the bloodline. We end up putting in an accumulation wedge. And then boom, back to the top of the top of the wave structure, right? And so the wave just kind of resets itself. I mean, that's a highly probable or possible outcome. Okay. But as long as we're in this kind of green zone, right? It's kind of just touching the grass, right? Then like these are good areas to buy, guys. I mean, even if we go sideways, we still cross it, right? If we go down, we cross it. If we go sideways, we cross it because over time, prices rise, right? And so we could have the same price for 2 years, just hypothetically, we have the same price for 2 years, and it's still a really good value because it's on our cycle wave, right? And we never know when we could have just some type of middle kind of chaos like this stuff, right? Like we have no idea when that kind of middle type pump will come. And so you're going to kind of want to have some concept of where you want to buy. And I'm just providing perspective here. Now, of course, I was inspired to make the Alpha Origin channels by a guy who had like an origin line, and he called it the most important line in crypto, which is a lot of nonsense because his origin line was completely wrong, right? But, you know, I modified it. I took the idea and I modified it and made the Alpha Origin channels, and it's just been perfect at predicting where we have capitulations. Okay, so the yellow line is definitely you'll want to have sold the top of the market by there. The white line, we're probably in capitulation, probably mid capitulation. And then the blood line is where everything becomes just a really great value. Why is that? Because historically, the bottom of the chart is underneath my bloodline. The top of the chart is historically above my bloodline. Above, above, this is a top. This is a top structure. This is a top structure. This is a bottom structure. Could we end up putting in another bottom structure underneath my bloodline? Well, that would also be consistent with my wave principle, which would take us down to 12 to 14,000, even if we have some sideways action, even if we have pumping, like there's some type of a bottom structure that could be put in here. We could go sideways. We don't have to dump. We could go sideways for a lot of time, but it would be nicer if we dumped, right? It'd be nicer if we dumped because if you dump, you can have an instant reaction. Okay, and you know what that looks like, right? boom, right? Like that check mark pattern. You go sideways and it's boring and you might miss this pump, right? But you have like a catastrophic dump and then you immediately have an instant reaction. It's just much juicier, right? Look at that depth there versus this. It didn't have any depth. Okay, it just went to the bloodline, basically. We're already at the bloodline. We're starting to break down from the bloodline. What I want is some type of a V. And then let's kick it up to the, to the white or to the yellow line, right? Or even if we're underneath, like if we're underneath the bloodline, then even just coming back up to the bloodline at 25K. Because if we're down here at 14 to 12K, then that's going to be a very nice run. Okay. So like all of this stuff is relative, right? And then even if we came back down and chopped around, I mean, like we're still going to get there eventually. And then maybe came here and make that accumulation wedge and then pop up eventually, right? I mean, even if it took like a year or two, like we're going to have some very nice runs and we're going to be really glad that we bought in this area. You're not going to know exactly where to buy. Nobody knew exactly where to buy here. Nobody knew that we weren't going to go under this bloodline back here. Okay. So I'm just creating these alpha origin channels as a conceptual guideline for you guys. And so, I don't really have anything too deep to add for a Macro Monday. I think like everything that I've needed to say, I've said, and all the variables are so chaotic these days that it's almost like just boring to go through it because they're all just uncertain. Like I can't give you certainty about any of these macro variables. Okay, it's all up in the air. And there's like 10 or 20 things, right? Like that are most important, and there's like 100 other little things. And so I would just put the perspective in front of you that guys, like I created this macro tool for us to use, and we are under the bloodline. It told us where the top of the market is, right? It told us where we're going to capitulate. And it also tells us where is a good buy, right? And so I don't know. You can be perma bears if you want to be, but I'm thinking if we go sideways for a longer period of time, technically we'll be going deeper into the green because going sideways as prices rise, like technically we're going deeper in the green even if prices hold still because the relative value increases over time. And if we drop, even better, like because it's instantaneous and you can see it and it's just very easy to calculate. So either way, on the next big drop, or if we just continue going sideways, I'm thinking it's time to start considering what you might want to buy, where you might want to buy. Okay? Like I understand the world can just rug us. We could have World War III, we could have Cold War II, we could have Civil War II, right? We could have the Great Depression, we could have who knows, some type of a new epidemic, right? We could have China invading Taiwan, right? I mean, Russia could launch a nuclear weapon. I mean, all of this could happen. Like we are living in a very crazy era, okay? Right? Bonds, the bond market could have its legs kicked out from it, and then everything gets destabilized in the entire world economically. But if if your only option is catastrophe, right? Armageddon, annihilation, right? If that's like one option, and then the other option is starting to DCA and turning a little bit bullish because maybe we're approaching the bottom, then between those two options, the only one that pays out is is taking that little bit of risk. Okay, and so I would just say, like, the point of this chart isn't just to scare you out of your positions up here. The point of this chart is also to scare you into your positions down here, right? Otherwise, why did I make this? So that's just you know not too much of a macro analysis today. Just some macro perspective. Okay, don't be a perma bear. Don't be a perma bull, but don't be a perma bear. And yeah, if we have another leg down, especially if it hits 14 to 12K, I'm gonna consider that a strong, strong buy area. And then, of course, I wish that we get to a 7 to 10K. I really wish that we do. I would love to see just this measured move kind of playing out, and then maybe a flash wick into those areas, and then just a pump right to the midline up here, and then maybe like a reset, right? Double bottom, some type of liquidity grab, some type of retest of these prices, and then it'll take a year, it'll take 2 years, whatever. But we get a monster run, we get another monster run, and then we get like the real bull run, right? So I don't know, guys. I'm not seeing signs of strength right now. I'm not seeing signs of weakness right now. I'm just seeing sideways. And I hypothesize that we have one more dump. I hypothesize it, okay? It's my hypothesis. I would love, 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 love to get to these areas. But there's a reason why I have this dark green line right here. Okay? Because I'm a reasonable man. And for the last 6 months, you guys know I've had these things plotted out. For the last 9 months, this level is just always made sense to me. Just always made sense to me. And then anything under the bloodline, like I can't talk bad, I can't talk against anyone. I can't talk anyone out of DCAing and underneath my bloodline. It just makes too much logical sense. Okay? I mean, I'm not giving you financial advice. I'm just saying it makes logical sense. This is the top of the market. Underneath the bloodline is the bottom of the market. Top, bottom. Simple, right? You don't have to be a genius to think of those ways. Don't buy here, right? Like an idiot if you do that. Right? Buy here. So guys, yeah, that's your macro perspective. Let's go ahead and jump into the real charts. Let's just get out of this big picture stuff. Let's get into the nitty gritty. And yeah, I mean, I hope you enjoyed those alpha channels, those alpha origin channels that I have for you. Um, I'll try to bring them back every once in a while, just to get perspective where we are. Let's remove that. Zoom in a bit. Get out of log scale so we can see the real price action. There we go. Okay, so guys, we are just being wedged in and wedged in and wedged into this thing. You can see I don't have the absolute bottom to it here. There's like more space. Okay, like we can consider these lower wicks. There's more space for us to drop and just chop, right? Like we don't have to do anything right now. We don't have to pop out of this. We don't have to do anything. We can just like fall down, go sideways, and still just be in this shape, okay? So don't get too excited if we do have a drop. Don't get too excited, if we have a little fake out. But if we do end up bouncing off of this thing and then putting in a higher low, that would be an incredible sign. If we do end up breaking under this thing and then retesting bearishly, right, the bottom of it, then that might be a good time to de-risk a little bit, if you're long on something. I mean, it could always just be like one of these weird little flash things also, so you have to watch out for those market maker shenanigans, okay? Just presenting you the obvious 3 plays that could happen, just so that you have it in your mind and you understand how you're going to behave in case, this happens, or in case this happens, or in case this happens, right? You got to know how you're going to react to that stuff. That's the macro perspective, right? I mean, technically, we could just do this, right? One day, right? Just to bore everyone to death. You know, just think about it, okay, guys? From a price action perspective, we're just in a rectangle within a rectangle, and that's pretty much it. We have a measured move to here. If we can get above here, then we could get up to here. We have a measured move down to here. If we get to there, then we have a measured move down to 14 to 12, right? Just common sense stuff. It's your little local price action, right? Something like this, just in this between these yellow lines. We could wick under. We break under this wedge. Probably we're going down to 14,000 next. We're looking for signs of weakness if we start to break down. Looking for signs of strength, right? Some type of a spring if we're on our way up. Have some concept of this in your mind. It's good old Wyckoff stuff. It works. It's not a conspiracy theory. It's just trading patterns. Let's go ahead and take a look at our volatility. We're on the 4-hour. That 4-hour volatility did play out. Remember I was telling you it was screaming? We did play out. You can see it pinched shut. Now we're just consolidating again. Let's go to the daily. Just if TradingView wants to load. There we go. Daily, not doing anything. Just attempting to expand. Looks like it was expanding to the upside, and then we're just consolidating back down to the downside. That's how I read this. Volatility is direction neutral, so you can't really claim to know with 100% certainty there. It's kind of like a quantum physics kind of thing. Like you can measure your volatility, but you can't know the direction that it's going to go in, right? Like it's just a dichotomy. It's you can know only one of those things. So we just try to get cues from price action, from momentum, things like that. But you can see, like, we just have low volatility. If we're going to expand and just like shoot up off of this 2-day massively low volatility, that could just expand like crazy. You know, we have no idea when it will happen. We have no idea which direction it'll spring into. All we know is that there's a stretched rubber band that wants to be like shot in a direction, either up or down. 3 days joining in. 4-day is doing something similar, but not quite there yet, but similar. Really low volatility. 5-day, believe it's joining in. Similar to 4-day. So the stage is set. The stage is set for either a move to like 14K or a move to, could be even 25K, right? Just like one of those two directions with about that much force, okay? The rubber band is going to get snapped in one of those two directions, guys. That's our volatility. EMAs, 5-day, we're underneath the 9, really bearish. Underneath the 4, really bearish. So the weekly, it's going to be a disaster, right? It just looks really ugly. This looks really ugly. But we are on that 300 support still, guys. I was mentioning that 300 for several episodes. All the way back here, I was saying like we could catch the 300, and we're catching the 300. So we lose that 300. It's around 17,800, 17,800. We lose that, probably going down to 14,000, right? Maybe get kind of hung up around 16,000 for a little bit. You don't know. Let's look at the daily. Daily EMAs, I mean, just kind of in a squeeze, right? We got a little squeeze there and just kind of coming back and retesting it. But again, like I was mentioning, there's that 4, that really fast EMA is in between the fast and the slow EMA. And so the really fast EMA is just really threatening to just squeeze us to the downside. I mentioned that, guys, in the previous episode, and it's playing out. It's playing out. The 4 pulled us back down, right? Look what happened here. You see this? The super fast EMA, the 4, got ahead of the 9. It pulled us back down. Why do you guys think I use the 4? That's like my it's like my calling card. I'm using the 4 EMA, guys. I recommend you add it to your tools, okay? It's just as important as the 9 and the 21. The 9 is the red, 21 is the yellow, okay? And, you know, we're nowhere near the 50, okay? Like we're not above the 50 or anything. We haven't flipped bullish or anything. You know, on a bigger time scale. Just doing a little price action on the lower time scales. But yeah, that 4-9 inversion, I mean, that thing can just pull price action right down. It did it here. Look at this, pulled price action all the way down. Did it here, pulled price action all the way down. Doesn't matter where your 21 is. If that 4 and the 9 are flirting like that, upside down, like it can easily pull you all the way down. So just watch out for that. I warned you about this like 2 episodes ago. I did say that we were likely to be in a squeeze, but that would probably have some possibility to pull us down. Just be careful about that. The 4 being above the 9 there. Let's see here. Let's look at the 4-hour. See what we look like right now. I mean, this is a cleaner picture of the 4 above the 9, right? Just squeezing us down. Now it's squeezing between the 9 and the 21 to the downside, but that 21 on the 4-hour is holding pretty flat. That's what it did up here also. So that did give support. So if the 21 can hold, that could be supportive. Maybe a little bit of wick and then tries again. Who knows? Right? Who knows? It did get rejected. It did get rejected by that 200. I was suggesting that in the previous episode with the EMAs, just that the 200 on the 4-hour has just been rejecting us, rejecting us, rejecting us. Rejected, 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 right? Rejected again under the 200 EMA on the 4-hour. It's cock blocking our moves there, right? But we keep trying, keep trying. Yeah. So this head and shoulders didn't play out here that I was looking at over here. I mean, this is a long enough structure that it could still play out. We did get that wick on the smaller move, but we didn't get the full measured move. So the support really held right here. But in terms of just some transparency, some truth in advertising, let's go ahead and look at a previous episode. We do have a bit of a head and shoulders going on right here, where it's kind of hard to see, but you can see that we do have this little thing going on here, thanks to that kind of bounce that we got off of that Japanese currency manipulation in the markets right when some Fed members were signaling the potential need for Fed pivot. And of course, the measured move of that is quite convenient in that it would actually take us up to this area right here. So yeah, I mean, so guys, I was just trying to point out that there's likely to be an inverted head and shoulders that would take us to that downtrend. And if we go ahead and just take a look at that structure, right? Let's get rid of the EMAs. That head and shoulders there. Look at that. I mean, it just played out perfectly. Boom, guys, right? Boom. We nailed it. I mean, this was kind of a skinny wick for the top of it. So kind of hard to know exactly where it would go. But even if you take the conservative one, then the measured move was right there. And where do we nail? Right there, guys. Like, boom, like we got this move, guys. So, you know, just truth in advertising, like the stuff we're talking about on Alpha Commission, right? It's no joke. Like you could make money off of that. Just call after call that we've been doing here every day, you know, they just end up working out. So let's go ahead and take a look at our momentum. Good old alpha momentum pools up here. Let's hide some of that stuff. So the last time that we were talking about the momentum pools, I set this pool right here. I said we need to close above it in order to look bullish. We were below it. looking kind of bleak at the time that we were talking about this pool, but I said if we can get right above that pool, if we can sit on top of that pool by the closure of the day, and this is the day, right? This is the day. We're on the 4-hour chart right now, so these are the candles that were within that day. We closed on top of it, and look what happened. Boom. Just boom, guys. Boom. No joke. No joke. These alpha momentum pools, like that was the momentum, right? Your momentum shifted to the upside. We caught it. Brilliant play. That head and shoulders, brilliant play, right? Went right along with the momentum pool. And you guys might have thought, oh, well, you need to calculate the neckline there, blah, blah, blah. Nope. I need to calculate the momentum to know that that move is going to play out. So boom, guys, like we got it. And then, of course, what happens, I don't know, the same thing that happens always, in crypto, right? We reach some type of resistance and people sell. So they sold, right? Like that's what people do, right? You want to take your profit, right? You're doing like a 20x leverage, right? You're doing like 100x leverage. I mean, you're going to take your profit. What was the size of that move? 3%? So somebody just on 20%, 20x leverage, right? They got like a 60% gains off of that. Dang, nice, right? Time to take profit. You're at resistance. Broke down. My 2 to 5 day projection. My 2 to 5 day projection is this white pool right here. Look at this. Look at this. Boom. Caught it as support. Almost to the penny, guys. Almost to the penny. Look at that. Look at that wick right there. Right there at the bottom of my momentum pool, but it caught it and held on top of it. And so we lived to save our momentum for another day. That's why I didn't make another, that's why I didn't have to make an update. This momentum zone, just holding the 2 to 5 day projection perfectly fine, still holding it. But we are having kind of a breakdown, so I did think it was time for an update. You can see right now, this is the new daily momentum pool. We're just kind of swimming around in it. The day has just begun, right? This is going to close tomorrow afternoon. So hopefully we don't close under it. We'll lose our momentum to the downside, right? Just statistically, there's a greater chance that we'll lose our momentum to the downside. Doesn't have to happen, but statistically, it should happen. If we can stop swimming around, sit on top of the, sit by the pool, not, out on the surface, catch some sun, get some vitamin D, then we could perhaps have another nice pop, right? Maybe up to this area. My next 2 to 5 day projection has us perhaps in this area if we can hold on to the momentum pool. If we break down, then that's just an extra bearish level. Okay. And if we get on top of this momentum pool, the 2 to 5 day projection, that's super bullish, guys. It's usually a great indication. Now the problem is the majority of this momentum pool is overhead. And one of my principles is if the momentum pool is above us, then it's greater likelihood that we're going to get pushed down. I mean, the 2 to 5 day projection is above us. There's a greater likelihood that our daily is going to get pushed down. You see this 2 to 5 day projection? It was actually lower or equal to the previous day. I mean, to the day that it's tied to. And so the statistics were to the upside. Even if it's just a slight advantage, it had that advantage to the upside. In this case, There's a slight advantage to the upside, but there's a huge disadvantage to the downside. So, could we lose this one potentially and then get reset at the bottom or something? I don't know, right? Not sure. We're gonna have to see how it goes, but could happen that way. And then we come back up, maybe, What were the signals that I gave? These were our signals for back here, right? If you got over that line, you're definitely bullish. Boom, boom, guys, right? Look where we stopped, right under my uber bullish level. Market just wasn't ready to be uber bullish. Came back down to bullish. Might come back down to just neutral. And then hopefully we don't get into bearish. But this needs to be updated. This was from a day and a half ago. So I updated it so you don't have to sit through that stuff. These are my new updated levels. You can see there's difference. So these are your key levels to watch. Uber bullish above 19,650. Probably can front run that around 19,550. That's just been such an important level. Just keeps coming up time after time on momentum. Multiple instances of momentum saying 19,550. So yeah, I think that's a really critical area. But just using my standard method, 19,650 would confirm that for me. Just want to maintain bullishness, right? This kind of pop that we got, you want to maintain bullishness. Got to get above 19,365. That'll confirm it for me. Just for a bullish bias. It's not like guaranteed bullish, but it's a strong bullish bias, right? For kind of a weak bullish bias, above 19,330. Bearish bias, under 19,213. Going to be pretty bearish. We're going to lose our 2 to 5 day projection. I could delete these old momentum pools back here. That was just a brilliant play though, guys. That head and shoulders and that momentum zone. I mean, just freaking brilliant, guys. And yeah, uber bearish, ultra bearish, below 18,730. Going to lose a lot of our momentum. Going to lose all of our momentum, basically. Our upside momentum, I should say. So these are key levels to watch. And then let's go over to stocks. You can see stocks are kind of struggling to get above the line that I set. We need to get above this line. Hold on top of it in order to pump. Alternatively, we can dump pretty hard on this thing. I think Bitcoin might be waiting for that, maybe, because this is kind of like just a double top until then. It's the S&P 500 mini futures. Yes, one exclamation mark. I mean, we are in that bullish zone, and we did pump off of my bullish signal, so good. But again, we need to get above this green bar, so just you can ignore this stuff now. That's just 2 days ago. But we need to get above this green bar. Okay, like we don't want to reject down here. Let's go over to NASDAQ. Should be same principle. Very similar here, yeah. Struggling with its green bar too, guys. Like, how did I know that? Okay, marked it out in advance. It's in the previous video. Had to get above this green bar. We're not getting above the green bar. Like, so I can't be very bullish on it yet, right? But were we bullish? Yeah, and we did. We pumped. We pumped off of my momentum zone. See this white box right here? See this box? Pumped right off of it. Got above my bullish bias. Boom. Pop. Right? Nice play. But, you know, the standard is really easy now, right? At this point, we need to get above the green box. Okay, and then our first target is this little kind of downtrend here. This is NASDAQ. NQ1 exclamation mark. This is a ES1 exclamation mark. You see, target, that circle here, right? And then if we can defeat those ones, then we have this yellow downtrend. Assuming the chart wants to load, right? You can get all the way up to like 4,100 on the S&P 500, and it's still going to be really bearish, right? This is going to be a bearish pattern still, and we could just dump down again. So if we do get a nice pump here or here, like, I mean, what's the rest of the market going to do? They're going to take some profit, right? Probably a good idea to take some profit. If you bought down here, probably a good idea to take some profit in those areas, here or here. Maybe even at this green box, just like take profit 1, take profit 2, take profit 3, right? And if you break above that one, then you can maybe restart, you know, something like that. Let's see how high we could get on NASDAQ. Sorry, guys, I'm really exhausted today. Yeah, NASDAQ, I mean, if we get above the green bar, then target is somewhere around 11,850. Then above that, I don't know, 12,400, maybe 12,600. Then probably a rejection. Continue on our way down, maybe to my blue box. I mean, unless we break that downtrend, that macro downtrend, then, you know, maybe we could flip this whole chart around, go to the upside, and just have a massive bull run on Bitcoin and crypto. But until then, until we do that, we could easily get rejected and then just capitulate. And that could be where Bitcoin has a dump to maybe 14 to 12K, maybe lower. Who knows? We're not there yet. What supports some bullishness? Well, we do have this kind of like interesting kind of like bottomy kind of structure going on the yield curve inversion, right? The 10-year bonds and the 2-year bonds. The yield curve inversion is kind of making a nice little triple bottom there. Nice little W here. You know, if we could get that uninverted, that would be great. It looks horrible right now, but at least it's turning around. Man, I hate it when TradingView takes so long to load. Come on. Let's go. No, not gonna load. Oh, there we go. Okay. The heck? All right, there we go. It's weird. Anyway, you can see like how low we got in 2000, how low we got in 1989. We basically flirted with breaking under those levels, but we're at those levels, which were really big recessions, right? Like really big crises in the global economic framework. And so, like, we got to those levels. Terrible, horrible. But we're putting in a bit of a bottoming structure, kind of like this one. And so, what's the hopium, guys? The hopium is that either we go sideways or we start to claw our way out of this thing. Who knows? We could be at the bottom of the market if that's true. I mean, these kind of bottom structures, like right here, like it took a little time to let it develop. It's kind of like up and down, up and down, up and down. One last down, right? This just has like an up and down. It's got an up, but still kind of like a little lower high on it. Could have another down and then maybe, you know. So no promises. Could still have another capitulation in the market and then this thing turns around. That's our yield curve inversion. US 10. I mean, it's looking kind of toppy, guys. Like this is a huge stretch. We're up here in this resistance area. This would be a nice place to just kind of get rejected. Let's get this on the monthly. Not gonna lie, it still looks like it's like a spear of death to the sky. I don't know how this is gonna end, to be honest. But hopefully that thing turns around. Yeah, the 3-month, the quarterly, it's just crazy. I mean, have we ever seen something like that? Like right here, I guess. When was this? 81? 1981? That's nuts, man. So this is crazy. Like, come on, this thing needs to come back down. Hints of it, but not nothing definitive. Weekly is getting close. If we can just get driven down just a little bit, bonds might start heading down here. This 10-year. Anyway, if this thing turns around, that could also be a signal, just kind of evidence of a possible bottom. DXY continues to threaten to break down. If the US dollar does break down, then that could be a nice temporary bottom at least, if not more, if not longer. But we're still flirting with support on this diagonal. We did lose this diagonal from here to here. We lost that diagonal. The Japanese pushed us under there. It was a national strategic, thing that they did to try to pump up the yen. Just like trash the dollar. They just like sold a bunch of dollars, devaluing the dollar. Otherwise, the dollar would easily have broken 114. Okay, it was like right there. It could have easily broken 114. Could easily have pumped to 118, just destroyed markets, capitulated everything. Probably we'd go into a V-shaped recovery. I mean, but the Japanese, I mean, they prevented it. They prevented that drop. So if you're a bull, you can thank the Japanese. If you're a bear, you can curse them. But we're still just kind of middling, okay? We're just flirting with the edge of that. We could easily have a accumulation wedge here on the dollar. And just say screw the Japanese, like sayonara, guys, going up. Or the Japanese could do it again, or the UK or China could dump some dollars just to prop up their own currencies. The dollar drops down, or maybe just a bunch of small nations all together do it, right? Just dump the dollar. get down here to 103, 100, right? Somewhere in this area. And then maybe the dollar tries again another day, but we get a huge, run off of it. Because if the dollar goes down, then probably, risky assets probably can go for a run. Could also be the bottom of the market. It's just some things to look at. Can't just be bearish. Can't just be bullish. All right, guys, I'm going to wrap it up for there. Again, these are your key levels to watch on Bitcoin. We went over price action. We went over volatility. We went over momentum. We went over EMAs. Went over risk factors, stocks. Got some transparency on just a epic call that we made. Brilliant call. Hope you guys are enjoying those. This isn't really a calls channel, just trying to provide some value. So if you are watching, maybe once in a while you can make some money, right? I don't want to be like a signals channel, just adding a little value while we're in this bear market. That's your alpha for the day. Stay safe and happy trading.